Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, so you look at today's daily chart and you would have no idea that anything happened after hours last night, and it's a lesson that algos are being manipulated with fake news. You've certainly heard that headline before, fake news. Well, it's now impacting the stock market. For me personally, I go about life in a way that I think about anything that involves any kind of significant money, it's manipulated. Whether it is poker, politics, government, whatever, if there's significant money at play, there is either cheating or manipulation or something going on behind the scenes. So I absolutely believe that there are people that are utilizing fake news headlines to profit in short-term algo reactions. So just looking at SPY last night, we had the huge dump into after hours. And then if you looked at the futures market, as soon as 8 p.m. hit, when brokers close, futures shot right back up, and then we just had this slow climb and then a bullish day today. And the morning trading today definitely looked like some shorts were trapped, and there was a little mini short squeeze in the S&P 500. So keep that in mind, obviously, for all of your trading. And again, for me, it's just another reminder of why I like to be a day trader. I've never seen a market this responsive to news in my entire life, and I don't want to be holding overnight in this current condition. Maybe when we break and get clarity on the weekly equilibrium, then I'll be looking at something overnight for that direction. But otherwise, just in and out and not having to worry about those headlines. Those headlines last night and that roller coaster didn't affect my account balance in any way, shape, or form. And that's the way that I prefer it. If I'm in positions, I'm sweating and I'm watching the trading. When I wake up in the morning, the first thing I think about is I need to check where the positions are at. And that's just not how I want to live my life personally. So looking at SPY, it's all about the daily equilibrium and the tightening range. Tomorrow is all about 295.26. If we reject from that level, it's a lower high and we have a daily equilibrium in play to next week. And if we break that level, it's our daily trend change that ensures that we will stay within this weekly equilibrium for a bit longer, probably until end of October, in my opinion, which conveniently lines up with the FOMC. So it's all about 295.26 tomorrow. Maybe there'll be a top fishing play at those resistances. A lot of individual names are going to be testing the top of their bounce from earlier this week. If we reject, we're going to look for a pullback and a higher low compared to 288.49 and to remain in this tightening range. IWM didn't get as close to a bull break. The range to be watching is 146.11 support, which is our higher low, and our resistance level is 150.07. Those are the two most important levels. While we are within those levels on any individual name, that means that I am less confident in short-term direction, which means I pump the brakes in my aggressiveness as a trader. I trade less in tightening ranges. I trade more when we break tightening ranges. QQQ, we've got our low, high, higher low, came close, didn't break resistance, all about 189.74 tomorrow. If we lose the hourly uptrend by breaking the afternoon consolidation low of 187.55 without breaking 189.74, which is being tested in after hours right now, but lose the hourly uptrend without breaking daily resistance, daily equilibrium. And it's the same thing for SPY and its hourly higher low from this afternoon at 292.04. What I do like is how clear these hourly levels are heading into tomorrow. XLF also came close but didn't break resistance. So the key level is 27.57 and our higher low is 26.76. And so even just today, that was a top fishing play where we got within 6 cents of that resistance and then pulled back a solid 20 cents. So hourly uptrend still intact. If we fail resistance and then break the hourly uptrend, daily tightening range continues into next week. XLV, anything under 90.42 is a lower high, and anything above 88.10 is a higher low. XBI, same thing. Resistance is 77.77, and our higher low is 74.55, and we're heading back up towards that level. XLF and QQQ are closer to breaking resistance than XBI and XLV, which is not surprising. It's been weeks and weeks now that those two sectors have been stronger, and XLV and XBI have stood out as weaker. Here's a tightening daily equilibrium on the VIX. High, low, lower high, and it's all about 1640 into tomorrow. Hold it, tightening range into next week, break it, and we're in a daily downtrend, and the higher low pattern from the last couple of weeks will then be lost. Gold. So gold, 15.19.53, could not break, and then we closed weak. So that's a bit of a red flag. Low, high, higher low, double top rejection, and if we drop down and break 1486, the daily downtrend continues. Lower high, lower low, lower high, higher low, lower high. The common thing is every bounce is a lower high. And if we break 1486, the lower lows continue, and we're just looking back down at that recent low. Silver is looking at 1725 as its key support. Lose that level, and we lose our higher lows. We did break to a higher high here. Gold unable to follow. Bear miners got some follow through off of the double bottom. Wednesday and Tuesday was a double bottom day. Got some follow through there, but we closed weak. So what I'm watching again on the miners, high, low, lower high, higher low has been set. And if we drop down and break 685, I would consider that a bear break on dust, as this is a bounce attempt that gets no follow through, and then we would drop down to a lower low. Although actually, just want to condense this and see, maybe not. I'm going to view this on the 2-day time frame because I like it better, and we're not confident that our daily higher low has been set just yet if we're looking at this from the 2-day perspective. So low high, higher low, lower high, scouting a higher low compared to 618, not confident it's been set just yet. We would need to see more follow through into the upper $7 area. So again, I haven't traded miners in a while at this point. Missed that bottom fishing play, double bottom, as I was live streaming when I was pointing that out yesterday. But I don't trade when we get to a certain point of a tightening range. And I wait for the tightening range to break. And that's where I'm at with the miners at this point. And I'll trade other things in the meantime. And then I know, put that on the back burner, write it down next to my computer. So I know to check on it every morning and see if that break is incoming. And when it's real close, I'll know that's going to be a top priority on that day. But when it's not real close to a break, I know keep an eye on it, but probably not going to be trading it today. Tesla, I did take a bear trade today on Tesla. This morning I only traded for an hour and would have liked to have held on to this position longer, but it was a bearish play based off of this resistance. So again, if we're looking at a condensed equilibrium, this is the 2-day time frame. So high, low, lower high, higher low. This was the resistance. 248.71. We started the morning all bulls, just shooting straight up. We got real overextended, which is exactly what I want to see if I'm top fishing resistance. So I made an entry, bearish, shorted common shares of Tesla in the mid 248s, and I put my stop $1 above resistance. So my stop was at 249.71. It did not trigger, and then I sold on this bear break. If I were at the computer all day and if I had a lot of patience, obviously there was a lot more profit to be had. But again, just taking the profit when I had it, close down the computer, get on with my day. And the bottom line was a play from a broader equilibrium pattern. And although we broke resistance, technical analysis is certainly not exact. And the resistance break only occurred by 57 cents. What's 57 cents out of a $248 stock? We are talking, what, 0.2% or so? That's why you got to give wiggle room. I always give wiggle room a little bit. If my stop loss is based on support, I put it a bit below that support. And same thing in this instance, because if I had placed my stop at 248.72, I would have been stopped out right at the top. So ended up being a nice bearish entry off of that level. Are we going to get follow through and stay in this equilibrium with a pullback from here? What's the hourly uptrend like? We would have to fail to break the high of yesterday and then break the low of today to change the hourly trend. We've already lost the hourly uptrend, but to confirm an hourly downtrend, we have to see that lower high and lower low. And that would tell us, if that happens tomorrow, that we're going to stay in this equilibrium a bit longer and look for a higher low compared to 224.28. Oil bulls defending support. So 50.97 was support. We got to 51.39. Bulls need to break 54.04, which is being tested. We got up to 53.95. Break that level and the bulls will breathe a sigh of relief that the lows of August will hold for now. On the weekly chart, though, we're certainly looking for a lower high, anything under 63.33. This is a very important level for the markets as a whole for the rest of the year, in my opinion. 50.51, 50.59, and currently bouncing and defending that level. Natural gas inventory report, bearish reaction. Daily lower highs and lower lows continue. Anything under 2384 is just a daily lower high next time we bounce. And the next support we're looking at 218.2 and 217.2. That's where we stand in the market as a whole. Hope you had a good day. We'll check in over the weekend and see if SPY bulls are able to pull off a bull break. If not, tight daily range, waiting for clarity into next week, and patience. Thanks again. See you soon.